again some of the opportunities that they are interested in hiring MSCF students for. So let's give him a warm welcome.
Can you guys hear me on the microphone, or is it just my natural intonation? Because I want to make sure.
From New York.
You can hear us? Okay. Okay. Forget it then. Okay, so thanks, guys, for showing up, for taking an interest. You know, at the end of the day, hopefully some of you will be intrigued enough to want to learn more, and then we can take the conversation from there if it comes along. But if not, maybe you'll have learned something at bare bones from there. So I was having a conversation with the president. He wasn't sure how to pronounce the name, and I said it's Pugilist Ventures, and this is sort of like the derivation of where it came from. So myself, I was actually an amateur boxer, an amateur Muay Thai, which is kickboxing, if anyone's familiar with it, and my partner had an affinity for boxing as well. So it kind of seemed to fit the spirit of like who we were, but also what we wanted the fun to be. And also it's a word that no one really knows anymore. So it was really easy for us to get like top bids on SEO whenever people start looking for the fun. So we need to make sure that marketing is of key importance. But I wanted to provide that background a little bit. So just to lay out the quick agenda here, I won't belabor the point too much. I don't like hearing myself talk ad nauseum. So we'll do an overview. We'll talk about our investment process. I'll briefly touch into some of our performance to date, future growth plans, which is why I'm here, some of the specific tasks that potential interns for us may be asked to do, and you know, ultimately, what's in it for you? Like, why should you guys care about becoming interns, you know, for this upstart firm that my partner and I run? And then I'll open it up for questions. Hopefully there'll be at least 5 to 10 minutes to go through questions and just, you know, see what I can do for you guys. All right, so first and foremost, who am I? I'm not going to belabor it too much. Obviously, I'm the co-founder and managing partner of Pugilist Ventures. I'm here. I graduated in 2016 from the Tepper School of Business. It's where I got my MBA. I've got a swash of experience primarily within finance, but a bunch of different areas. Finance, debt investing, trading, obviously now venture capital and cryptocurrencies, blah, blah, blah. You know, some of the writing things, it's, you know, it's nothing I would put on my resume, but it at least, you know, helps us get out there and also lends credence to some of the things that we're saying are actually new topics that haven't necessarily been broached within the crypto and blockchain community to date. Okay, so who we are. I was talking earlier, it's like what sort of scheme or the universe of which we invest. So we're first and foremost an early stage investment company that will invest traditional in startups, quote unquote, whether it be at pre-seed or seed rounds, but also at ICO and pre-ICO rounds. Now I say early stage companies, not necessarily projects, because I hate whenever ICOs sort of build themselves as just, you know, hey, we're just a project looking to make a protocol and you know, raise $20 million, $50 million. So I kind of hate whenever they do that. So one of the areas of concentration for us is within fintech. My background, I sort of spoke about it previously, but also my partner's background is sort of complementary to mine, where he is primarily from the IT side and product management side within banking primarily, but now he's out there working for Intel. He was working in their China Mobile FinTech division in Shanghai for a little while, so his skills are quite complementary to mine. But knowing what we know and knowing what we don't know, we're going to focus on FinTech for the foreseeable future. But as we grow and the firm grows, we'll obviously branch out into other different areas that will be accretive within the blockchain space. So the middle thing is just sort of like buzzwords of, you know, because of blockchain and most importantly because of, I guess, ICOs or initial coin offerings, if no one's familiar with the acronym, I apologize for that, is we're able to still essentially generate venture capital type returns, but in theory still be able to provide public market liquidity to investors, which is quite important once you start talking to those endowment funds and also the pension funds or family offices, whether it be single or quite large multifamily offices. So that's actually quite important for them. one of the most important things is the fund right now is entirely proprietary. So my partner and I, we funnel in our money, we make investments from it, and so on and so forth. But right now we're in the process of raising a dedicated fund, speaking to some of the types of investors I just listed for you locally, but also throughout the U.S. to raise a dedicated fund, probably be within the $5 to $10 million range before the end of 2018. So not huge, not enormous, but it's something large enough to get us moving and then also validate proof of concept of what we have, and then we'll re-up for the larger amount, in theory, in the future. Okay, so just quickly about our current investment process, and then I'll touch into how it's going to change in the future. So quickly, we'll identify high-performing companies or potential ICOs that are coming out. We'll sort these through, so obviously us being from Tepper and Carnegie Mellon, we created a proprietary machine learning model that helps us sort of sift through some of the companies that we're looking based upon, what we've kind of unceremoniously dubbed probability of viability. So if it passes that hurdle rate for us, then it'll move to stage 3, where we'll look at it. So if it's just a straight company, then we'll do our traditional business analysis, dig into it, go to market strategy team, blah, blah, blah. If it's also an ICO, then we'll also look at the crypto economics behind it. So I'll touch into some of like the business fundamentals analysis, not too much, but I will briefly touch into the crypto economics as well. Essentially, because they're issuing coins or a fixed supply that is subject to supply and demand, they need, or as an investor, you need to make sure that what you're buying has the potential to appreciate in value, and you need to know whenever that non-linearity hits to where it's going to start to depreciate in value. Is in a crux of what crypto economics is, but the caveat to that is the space is so new, everyone's trying, no one knows, there's no tried and true tested methods of how it works and what it is. So I myself am experimenting with 3 primary ones. I think they're pretty good, but only time will tell whether or not they actually, hold up to snuff. But that's sort of a brief overview. And then semi-ultimately, we'll make the investment where, we'll look at what are the best risk rewards. Obviously, we want to make sure that we have asymmetry in our favor. We're maximizing returns and minimizing losses. And then 5, the final point, which I was sort of speaking about before you showed up, is monitoring and optimizing. So it's beautiful that we have the ability to generate venture capital type returns with public market liquidity. The downside is now we have public market liquidity with something that people don't necessarily know how to value properly. So you're going to see these ups and you're going to see these downs, and there's huge volatility. Not necessarily a bad thing, especially if we decide we find an asset and we just want to trade the range. That's awesome. Then, go super volatile. But from a fiduciary standpoint, if we just made an investment and we just generated a 500%, let's be lavish, let's say 1,000% return, which isn't unheard of in this particular space. Now, and then that suddenly goes down to only 100% gain, I have to explain to investors why 900% of their previous investment is now gone, and I can't say I'm just holding. Like, I can't be a perma bull in this particular scenario and from sort of an asset management, a fiduciary type situation. So protecting alpha is just as important to me and to this fund as it is generating alpha in this sort of current stage that we're in. So an example to quickly just paint a picture to it, Ripio Credit Network, I'm not sure if anyone's ever heard of it. If not, no worries. So Ripio is a company that's backed by a bunch of prestigious investors in Silicon Valley, the Drapers, even the Sun, blah, blah, blah. It's a fairly successful company. It's based in Argentina within finance payments, all that. They wanted to create a credit network to be able to lend on the blockchain within their network that they were building within Argentina and then eventually branch out in Latin America. I won't bore you with all the details, but I do have it posted on Pugilist's Medium blog if any of you are really that interested in. So we identified it, we sorted it through the machine learning, that's the probability that our model kicked out to us. Okay, keep going. We analyzed it, did the full report, and then based upon how we sort of lay out our heuristics, including the machine probability, we came to about 58% chance that, the probability of success would be in that range. not overly great. We probably, could adjust it down based upon human overconfidence bias, but we felt all right with it. So we invest 1,000 RCN at 7 cents per RCN, manage and optimize. Currently at 28 cents. I don't know what it's at today. I didn't get a chance to look at it. It might be up a little bit. But there's the chart for it, and that's the BTC chart. So I put that up there to sort of illustrate the manage and optimize sort of situation, because you could look at that and be like, all right, well, that's 400%, from what you could have gotten. Not necessarily the greatest, but it's still good. Investors are still going to be happy about it. But I put the chart up there to show it's not a straight process. Like, it's not a linear chart that you would look at and be like, yeah, it's just moving, it's moving up there. It's taking breaks every once in a while, but it's still moving up in that nice linear fashion. It's not like that. It's not going to be like that probably for the foreseeable future. So a lot of the junk gets cleared out of the market. I don't know when that's going to happen, but I thought that was a good way to sort of visualize it. I'm a visual person. So here's our performance. Let me see if I can. All right, so this is IOTA. This is storage. So this is something for the Internet of Things. They created a new blockchain. It's not necessarily even blockchain. It's called the Tangle. Storage is the blockchain of Amazon Web Services. I don't know whether or not that will hold. Amos Go is basically they're trying to create almost like a bank for Asia. I think their beachhead is within the Philippines. So trying to bank the unbanked, which I actually think is really, really cool. Ethereum, obviously, BTC. So a lot of what we're holding here is just our float risk, as I was sort of talking about before you guys came in here. For a lot of these exotic, we'll call them for lack of a better word, you can't just say like, okay, well, I have my money. Let's say I've got 10 grand worth of, USD. I would like to buy Ripio. Doesn't work that way. You have to convert to something that is liquid, whether it be Ethereum or Bitcoin, and then you have to go to another exchange, and then you have to buy those particular assets, whatever it may be. And then if you do get a gain, that's awesome, but now you're holding an extremely volatile coin that could lose 10%, gain 10%. You never know. And in each individual layer that you have, getting back to taking profits that you can hold in your USD account, there's 3, and there's time lag. So you don't know what could be happening. So we took profits yesterday on storage, and, I was just lucky because the uptick in the market was going up. So I always sell on an uptick if I, can. I don't like to panic. But the market was going up at that particular time. It could have still been crashing, or it could have reversed quite hard. There wasn't anything I can do about it, so you just have to kind of sit there and take it. So that's one of the risks, again, sort of touching back into, making sure that we're protecting alpha as much as we're generating it. But that's a lot of, what we see here when we're holding these. And then XRP, if anyone's been following the news, Ripple, it blew up a lot. We released a report right before it actually began blowing up. So we didn't get a chance to get in the whole thing, which kind of pissed me off, but it's okay. Stellar, which is essentially, it's a Ripple Lite, and for the best that I can figure out has been going up because, A, it's smaller lot sizes, so like more retail investors or speculators can come in and buy more of it, although they're actually like spending the same amount of money, and it's tied to Ripple. So Ripple was blowing up, and everyone's like, okay, well, I miss Ripple. Stellar's right there. So that's, inexact, but I would be pretty sure that it's fairly exact as to what's going on. So this number's changed. It hasn't gone down too much because the market's been taking a tank, but let's just say it's around 800% now, which obviously you don't want to lose that much, that much of a percentage, but it is what it is whenever you have volatility like this. So just a sort of quick little recap of where we're at. And that is primarily been built and put together with phase 1 that we have here. So like I was saying, myself, my partner, and we are primarily, I don't want to say analysts, but like we're more methodical in that particular instance. Where we know that we're not 100% strong in is within the trading, because it requires an entirely different temperament and also an an entirely different set of skills, especially whenever we want to get sophisticated around a quantitative approach, whether we can, even go one step further to be automated with algorithmic. So the gains that you saw, as mentioned before, are primarily within phase 1, where we're going. Phase 2, building quant models, belabor the point to protect alpha as much as possible, and the models can be based off anything, crypto network diagnostics, macroeconomic trends. I'm a big believer. I think interest rates play a big factor in this market, and interest rates have been going up. So I'm personally taking a look into that to see how it can potentially take a little air out of the sails of this market as well. Technical analysis, and I'm sure there's a million other gambits that for a person who's really, really interested in it and has the chops and talent can really find, find more what's in there. And then phase 3, we're ultimately going, building the quantitative models and methodologies to not only protect alpha, but also to begin generating it as well. Okay, so we're stacking. I'll pick it up a little bit because I see I'm losing some people. So the pyramid that we have here, business analysis, I said this is where we're at. This and 4 are sort of where we're at with phase 1, quantitative models, and then the technical analysis is where we're going with phase 2, and then ultimately this will all feed into phase 3, where trade and entry getting in, not only protecting but also generating considerable amount of alpha while protecting our downside. So I put it in a pyramid format to just be able to show sort of the holistic nature of it, is that all this stacks on one another, so that again we're going back to making sure that we're placing the right asymmetric trades that will allow us to potentially reap the most reward while minimizing the most downside risks, especially in a pretty volatile market. Okay, so the example, Ripple, XRP, if anyone's been following it, this is one of my personal faves as of recently. So we're going to walk through that sort of pyramid stack that I went through quite quickly. The business analysis, you don't need to read this. Just know that I did it, and we did a lot of it, and it was quite thorough and quite laborious. So the crypto economics, again, you don't need to read this. Just know that we did it well, and it was extremely laborious. But the one thing that I'll take into consideration is do we have the huge numbers? I didn't put it on here. But so the economics portion of it, Ripple has a huge amount of token XRP outstanding, and they put a large portion of it within escrow, and they're releasing 1 billion XRP onto the market each and every month. Not a lot of people realize that. Not a lot of people have really taken it into consideration and done the math. So if you just even project out, not even semi-conservatively, and then you take what that potential enterprise value or network value would be for Ripple, and then just divide it by the potential of the outstanding XRP that will be out there in the future, people who are like touting that XRP is going to be the next Bitcoin and go to 100 and 200, like that would be like the size of the world economy. It would be like hundreds of trillions of dollars. So those people haven't done the math, and it's not terribly difficult. It's just division, but you've got to be able to look for it, and you've got to be able to figure it out and see whether or not this probability of potential range of values divided by the outstanding XRP or will be outstanding XRP is the juice worth the squeeze. And right now, if you're just looking from here, there's an older valuation because there's more XRP in existence right now at $2. Had you gotten in maybe around 25 cents and rode it up to $2, maybe you just put on a trailing stop and you just make it sufficiently wide enough so that you can capture the upside exuberance. I've got no problem with that, and I would love to do it. But if you're looking from a straight fundamental perspective, and you would just know that there is a cap to how high it can go. So you wouldn't make your trailing stop super wide because you're like, well, I need to make sure there's enough room because it's going to go to 100. It's not going to go to 100. So that's really where crypto economics becomes important. And I felt it was relevant enough to sort of touch into that briefly. So the quant analysis, this is not anything that I build. This was built by a company. It's called Spreadsheet.io. The CEO is a very nice guy. But this is just sort of an example of what could be used by potential interns or anyone that would be affiliated or work with us. So this is a Monte Carlo simulation using geometric Brownian motion. So you've got our histogram over here, and then you've got the simulations over here. So at the end of the day, what it really boils down to is what's the median, and then what's our confidence interval. So our confidence interval this model was forecasting over 1 year. I got it there, I think. It's forecasting over 1 year, so within a 95% confidence interval, you can assume that the price of XRP is going to fall within 5 cents or $163.42. That's pretty wide, doesn't really tell you a lot of information, but it's an illustrative example as to if a better model could be put in place and potentially shortened over the next month or over the next week for how fast these things move, then that becomes useful for not only entering positions but also exiting positions, or also just seeing like how comfortable do we feel with the existing position do we have? Do we need to take a little money off the table, or do we feel comfortable? So that's really where we're driving, not necessarily with this quite broad model. So I find this fun. So this is one of the charts of XRP, and these charts, if you guys have been following the market, are a little bit dated because I made the PowerPoint last week. But as you can see, you've got this nice push up and then consolidation, forming nice support levels. Same thing, push up, support levels, support levels. That's nice. And then obviously you've got this beautiful, nice upward linear trend. So whenever you add the rest of the chart, it sort of illustrates like where the market is and like how nimble we have to be, because yeah, we had all of that on the way up, but now we're here and we're going here. And then again, if you guys have been following the markets, this was last week, yesterday, it hit this last fib level right here and then subsequently bounced up, but that's still a huge downtrend that I wouldn't want to touch at all. I mean, maybe if we put together some sort of model or trading strategy that we're like, okay, well, we can just play the pops. All right, I'll play the pops. I don't care about that because it pops typically 20 to 30%. That's great. I'll take that. And then we'll just sell to the rest of whoever the new investors would be who want to come in. But from a long-term holding position, we're not going to play with that because that's just fire. So as far as trade execution, this is where a lot of value is going to be added for us in particular, whether this be an ICO or a crypto asset like XRP. So it's like, where do we get in? Are we getting in here? Are we able to spot that and get in there? Or are we waiting for the initial push and we're getting in here? Or are we waiting for the initial push, some consolidation, then we're getting in here, and then riding it up? And then where are we getting out? Are we getting out here after the first major big push, or are we going to get out right at the top? Maybe we're just that good and we can do that. We spot that. It tried to break through this level of $3.20 3 times, failed. That's not good. We're out. That's awesome. Or are we those people and we're going to, say, hold, no, it's going to hold. It's going to come back and go to $5, $10, and then we realize, okay, this is going against us, and we need to get out for, just edification, and also it just kind of tickles me to laugh at myself. That's where I got out, because as I was mentioning before, I was like, no. I was like, I think this is going to hold. There's enough new money coming into the market that's going to push it back up to this level. I don't think it's going to go much higher than that, but we can still ride it and get it more. Once it broke this first fib, that's when I knew we were in trouble. So I waited probably too long, and then once the MoneyGram news came out, that MoneyGram was going to use XRP, their digital asset, to clear payments around the world, blah, blah, blah. You got this huge up push in price, and that's where I dumped, because that's exactly what I was waiting for, a way to get out, and that's what it gave me. And I did that yesterday with the up push with the market as well for storage, if you remember. We were talking about that. These could easily, so there's only a handful of ways to short the market right now, and none of them are really that easy. But this could easily, be flipped on its head and said entry points for shorts as well. It's like this failed 3 times, go in here or here, and obviously with a lot of these positions, it would have been quite lucrative because, as I mentioned before, it went back down to that initial level. So that painted a picture. It's about us. It's about me. It's about what I'd like and where I see it going. These are some of the particular tasks that we're looking for. I'll just be quiet for a second and let you guys read. Okay. I won't talk too much about this. Obviously, if you guys are in this program, 1 and 2, you probably have buttoned up programming skills. Maybe you haven't gotten to that particular portion of the course yet. That's, it's nice if you don't have that existing. If you have that existing skill set, that's great. If not, that's not a deal breaker. Same thing with the language, natural language processing capabilities. But most importantly is making sure that there is a fit. Because, like I said before, I'm sure you guys are super smart and fielding probably a lot of offers or have aspirations to go to a lot of high-ranking investment banks on their trading desk or even other proprietary trading shops, whether it be in Chicago, in New York, or wherever it may be. So I realize that this opportunity isn't necessarily for everyone, but if you've always found yourself a little bit more entrepreneurially minded, intellectually curious, especially about this particular space and sort of our approach to the space, and most importantly, have a desire to want to learn and actually find out the truth, rather than being right, versus seeking out information that already confirms your pre-existing notion, the definition of confirmation bias. I didn't sort of create those. I just stole that from Ray Dalio. But I think that is incredibly, incredibly important. So if some of those characteristics are you, then this may be an appropriate opportunity that you want to look and pursue more. But I realize that it might not be for everyone. So what's in it for you guys? The most important part. Again, I will take a moment of silence.
Excuse me.
Yes.
Can you elaborate more on the working position? I mean, where we will work?
So the firm is based, good question. So the firm's based in Pittsburgh, but I have built out some flexibility for remote individuals like yourself and any other person that's in that room. So that's another perk of it being a small fund. We're quite flexible. And with modern technology, what we lose having to sort of meet and handle things virtually isn't too much compared to if we were here in Pittsburgh. But the headquarters is here in Pittsburgh, but that doesn't preclude remote working as well. So, without further ado, what questions do you guys have?
So on one of the slides, I saw that you had used the fib levels and all. So I was just wondering, if you are even working on automating this theory of Elliott wave analysis for technical analysis.
Myself, I am not working on automating that because that is outside of my skill set. But that would be something that you could work on automating. But no, that's just straight out of the box Fibonacci levels from that particular platform, which was Polynex. So short version, no, but that is obviously something that I would love to have worked on and automated. Yes.
I just had a quick question regarding maybe the investment process and some of your thinking and mindset as an investor.
Yeah.
Are you concerned not only with kind of following the technicals, but looking at the fact that in an unregulated market, there's potential for collusion, and that sometimes there's people with insider information that can be acting like they were doing with Ether and potentially with Ripple that are making market moves that you may be unaware of personally as an investor? And then second of all, how do you guys think about in your due diligence about the potential security risks regarding a particular protocol and its potential improvements over existing ones, like potential for reducing double spend or dealing with forks in the ledger and stuff like that? And then I guess the final question is, I'm sorry, I have so many questions, but
I'm losing it, but go ahead.
Over the holidays, Ripple's co-founder, was valued on the Forbes top list, ranking alongside Facebook.
Yeah.
I know it did receive the deal with MoneyGram, but at what point do you go, in terms of its marketability to generate return, like at what valuation do I know this is kind of ridiculous?
Yeah, so I'll work backwards because it's most fresh in my mind, and then you can just refresh me once we get back to number one. But yeah, that is 100% ridiculous that, Chris Larson, for those of you guys who don't know, based upon the amount of XRP that he was holding, and whenever it shot up, his share was worth like hundreds of billions of dollars, and he was top 5 on Forbes of, one of the wealthiest people in the world, which is absolutely insane. So I think that is a perfect example of what people don't understand whenever I sort of went through that crypto economic slide, because there's so outstanding, it will be over 100 billion XRP whenever everything hits the market. So whenever you look at that and you see a huge run up to $3, $4, $5, and you just do the math, like obviously that's not sustainable. And that's the archetype of a bubble, is it goes and goes and goes until someone looks at it and says, that doesn't make sense. And then it deflates and then it crashes. So I think that was one of the things that eventually started the unraveling of that sort of Ripple trade. Like obviously, to your point, it could be, the people that were pumping it, and we suspected that it was going to get pumped at the end of the year, which is why we sort of put out the research, which was saying be skeptical from a long-term perspective, but be bullish from a short-term trading perspective. And again, that's on the blog too. It was on my Pugilist Medium blog. I titled XRP: The Dichotomy at Ripple. CoinDesk also picked it up as well. But yeah, like we knew that was going to happen. But in the long term, whether or not XRP will be a lasting asset is quite speculative. But that was to your point, that was one of the things that I think ultimately started to bring it back down, as people started scratching their heads and thinking about that sort of question, coupled with the fact that a lot of people that I think they thought were going to come into the market and soak up the supply, that the pumpers and also people who were in throughout 2017 and wanted to lock in profits and have the best Christmas ever, they thought that more retail people were going to come in and soak up that supply, couldn't get access to the market because, again, you can't just, sign up an account, throw your USD in there and be like, well, give me some Ripple. Whenever people went there to do it, and I've heard countless anecdotal examples, they were like, well, what do you mean? The technology layers were too much for them to even get through. And I know, it's like, okay, was that brittle? That's pretty brittle will. But still, if you've got to go, if you compare that to Ameritrade or anything like that, it's not user-friendly at all. So that scared all those people away. Coinbase, Kraken weren't able to validate people, were taking longer than normal to get people's money out and in. That scares people away. And then the shebang is, okay, well, how do I trade it? I still want to get through all of this. Well, you just buy Bitcoin or Ethereum and then just trade that particular pair. And then whenever you make your profits, you just have Ethereum and, you just hold and go through the resulting 3 stages, 3 layers of technology to get back out. Those are extremely volatile. So I think ultimately that's what sort of took a lot of the air out of Ripple sales. So yes, point 3. Point 2, yes, you have to take all those sort of technological potential issues with the blockchain, but also competitive issues too. So that ties back into more of business fundamentals. So that's less of on the trading side, and that's more on the business side, where my partner and I, we need to get our head around the technology and see what competitors are out there. So to use Ripple as an example, and we just released our full research report on Stellar today as well, if you look at competition, it's like, all right, well, not only how's the technology, it's okay. You know, nothing great. At the end of the day, the primary intellectual property that a lot of these protocols have is their ability to generate network effects. If you don't think that they can generate sufficient network effects, like Bitcoin's network effect of brand recognition and being first mover, then you should not probably invest in them, because it's super easy to replicate another blockchain or another payment product. I mean, Stellar did it. I'm sure there'll be 10 other ones that try to come into the market. Those ones are important, but also you need to take into consideration the big fish, the Swift, looking to enter the market and partner with people who have that sort of knowledge and know-how, but also the permission blockchains like R3 Corda and Hyperledger from the Linux Foundation. So that comes down on business fundamentals to make sure that we look at it from a holistic perspective. Again, we may see long-term, ooh, this is risky, but short-term, let's get it. And that's essentially what Ripple was, and we saw for Stellar too. Now, not so much, because we're unsure if the market is rolling over. What was the first thing you said?
The limited number of actual holders of coins across the market in terms of in concentrated mass positions, and then the potential for collusion as people use forums and other sites to make trading decisions outside of widely accessible public information.
Yeah, absolutely. I mean, those are huge risks. So this is the Wild West. So we have to have a layer of nimbleness and appropriate risk management to take that into consideration, because we may be on the positive side of it. So say we spotted, XRP at 20 cents just on, based upon whatever strategy or algorithms we were using. And then that we were looking to get out at $1, but the collusion took us to 3. Okay, awesome. Like, sometimes that will work for us, and I'm not advocating collusion. I don't know. Yeah, but so like sometimes it'll work in our favor, but when it goes against us, we need to make sure that we have the proper risk metrics or risk management techniques in place so that we don't get burned too much. So I think that's how you manage it. But yeah, this is the Wild West, and also that's sort of where the natural language processing comes in, because it's easy to sign up for Telegram and join these groups and just look at the nonsense that comes out of it. So you can go to any Reddit channel that says cryptocurrency in it, and you'll just see lunacy. Same thing with Telegram. A lot of those particular forums, you'll really, really see like what it is, and a lot of it is not sophisticated money. So I wouldn't necessarily say that those are the people that we need to keep our eye on. It's the people that have vested interest in it that are the ones that I don't know how we'll necessarily like keep our eyes on it right now, but just to make sure that we can ride the good but also minimize the bad. Those are the ones that will really hurt us. The crowd, the herd, so to speak, they don't know what they're doing. They see it going up, so it's going up. I mean, they're the ones making it a bubble. Anyone else? What have I been doing the past 2 to 3 days?
Yeah, what have you been doing the past 2 to 3 days with this big kind of downswing?
So, all right, let's see. All right, 3 things. So this past weekend, which eliminates the purview of your 2 to 3 days, but I'm going to talk about it anyways. I started downloading a lot of this data because I started seeing that some of the market wasn't heading in a positive direction. So I started downloading a lot of historical data around the 3 most recent bubble assets, gold, oil, and .com, to be able to look at that and see if there's anything, visually that may shape, what's to come, to give us some sort of layer to see how we could be. It was not encouraging what I saw. And also combining those 3 assets to make bubble indexes, so to speak, again, it was not encouraging. So, and I haven't even gotten to the correlation of interest rates and the negative correlation of interest rates. So what I did is I drafted a 3-page newsletter, putting a bunch of charts in, walking through my logic and everything, that I sent out to investors and prospective investors as well, essentially saying, hey, this is what I'm seeing. Humans are notoriously poor forecasters, but this is what the market looks like, and this is what sort of like the historic imperative looks like. If you haven't taken profits to date, on the next uptick, you probably want to take profits, which happened to happen yesterday. So that's one layer of what I've been doing. The second layer, as I mentioned before, on the uptick, I took profits yesterday, so I actually ate what I was putting out to other people. And then third, as I mentioned, my partner and I finished up our most recent full research report on Stellar Lumens, which is the blockchain competitor to Ripple, that we sent out to the same list of investors today, and then probably tomorrow or early next week, we'll post it to our blog site in Medium. But from a market perspective, I'm keeping a cautious eye. I mean, at the end of the day, the downtrend is still in full form. It's still making lower highs and lower lows. You get these brief reprieves, but I'll be curious to see if it can break through this sort of downtrend. If it can, then I'll change. Like, as the facts change, I'll change. But right now, we did what we needed to do to make sure that we locked in profits, and we're sitting nimble, ready to attack the market, whether it continues to go down or whether it goes back up for a little bit before it goes down again. Ultimately, I think the market will go down. Anyone else?
Are there any questions from New York?
Good point. Go ahead.
So in the beginning of the presentation, I thought that it was a venture capital firm, but it ended up as a proprietary trading firm. So how do both things combine? I mean, if you do like a fundamental analysis of the coins?
That's the beauty of blockchain. We're in a place of this particular market. We're in a place that no one has ever been before, because we rhyme a lot with venture capital, but now we have this entire new element that rhymes a lot with hedge fund and proprietary trading firm for that. And it's because the markets for these, whether they be companies that are raising traditional funding that plan to go ICO or are already going to go ICO, at the end of the day, it's still early stage company investments where the venture capital comes in, where you need to be able to make sure that you have the business chops and also the crypto economics chops to be able to evaluate it appropriately. That's great. But now you're on a liquid market. So again, the original sort of notion that I put out there at the beginning of the presentation, I don't want to go to investors and say, the portfolio made you, 1,000% in Q1. And then whenever Q2 gets here, it's only 100%. That's not a conversation that I want to have. Doesn't mean we won't have it, but because it's early stage and no one necessarily knows how to value these things. So like even in venture capital, they don't know how to value these companies, it's behind closed doors typically and not on a public exchange. But now it's on an exchange. It takes on a beast of its own. So you're 100% right. It is venture capital and it is proprietary trading because it's a new market and we need to be proficient at both, or else we're not going to reach our maximum potential and we're going to leave a lot of previously gotten gains on the table, and I don't want to have that. Do I have any positions in? No, we don't. So to my knowledge, there's 2 venture capital firms that have raised an initial coin offering to be traded publicly, and that was Blockchain Capital, and Spice VC, which is headquartered in Europe, is raising right now to issue an ICO. So those are the only 2, to my knowledge, that are on ICO. I don't know if we'll eventually go ICO or not. I would prefer to keep it private money, but we'll see how things go. I know we're bumping up against time constraints. It's 1:16 right now. Go ahead.
What's your top coin for 2018?
I don't know. I mean, the market may be in the shit in 2018. I don't know. That's a good question. Let's say if things were sort of status quo, which they never are, I was really interested to see how Verge XVG could develop. It had gotten a lot of recognition already, probably too much so, but it was essentially a competitor to Zcash that was looking to make some incremental improvements to it, and I would have been curious, I guess I'm still curious, to see how that would shake out and how the team would be able to execute on it. So if you guys don't know, Zcash is a name brand sort of crypto coin, but it's almost entirely anonymous. So Edward Snowden made a statement one time saying that if you actually wanted to, the only coin that is in its current status that has the ability to not be monitored by the U.S. government, it was Zcash. And XVG is the ticker symbol or the token symbol. Verge is a competitor to that, which is obviously a little bit smaller, so its potential to grow would have been a little bit higher. But that one was particular interest to me. There's 15 others, but I can't remember them right now. Cool. Thank you, guys. I really appreciate it. Thank you, New York.
Thank you.
And just a reminder to everyone, the internship position is posted on Quant Connect. I think the deadline is February 1st, so if you're interested, please submit your resume, and Chris or Brian will reach out to you.
For sure. Thank you, guys. I appreciate it. Sorry I had to starve you guys out, but I was an MBA. I know that a lot of people just show up for the food, so that was the first layer of weeding people out. I apologize I had to starve you. Strategery, exactly. Hey, it was great to meet you. Yeah.